Hello, investors. This is Ted Zhang, Portfolio Manager at Revere Asset Management. Today is Friday, March 7th, 4:30 p.m. coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. State of the market, we are still in a mild correction. Market leaders with a down arrow. We're still constructing our 21 over 21 list. Short-term trend, all below the 21 exponential moving average. So we have a red arrow there as well. Medium-term red arrow, all major indexes above below the 50-day moving average, and long-term small and mid caps below the 200-day. Qs close below 200-day as well, but hovering right around there. And then the S&P just undercut and reclaimed the 200-day moving average today. So we still have the long-term trend in uptrend, but it's really being threatened right now, moving into neutral and perhaps even to a downtrend eventually. What happened today? Relief day as bears failed to push the markets lower. Big 8 up 0.05%, RG8 up 0.38%, S&P up 0.55%, RSP up 0.94%, Qs up 0.74%, QQEW up 0.373%, Dow Jones up 0.52%, mid caps up 0.66%, small caps up 0.43%, global 60 equity bonds up 0.37%, and GROTECTION up 0.15%. Jumping right into the S&P 500 daily chart. As you can see, this is the day one off the lows. We actually had higher than average volume and higher volume than yesterday. So maybe this is day one of an attempted rally. We will have to see because we've had rallies previously that has failed so far. So on a 5-minute chart, we gapped up or gapped down like 30 basis points, had a morning push to 57.70, and then sold off below the 200-day moving average. Once Powell started speaking, he didn't really change his stance on policy. The market started rallying around that lunchtime area after Powell started speaking into the close. So, day one potential of an attempt to rally, undercut, reclaim over the 200-day moving average. Apple, sorry, I'm not sure why Apple's there. Sorry, main list, S&P, RSP. Here we go. RSP also undercut, reclaim the 200-day moving average with an increase in volume. So perhaps day one of a short-term low, we will see. We're at the point where we want to see a follow-through day before we really start getting involved in the markets. The Qs, undercut, reclaim yesterday's lows, but still closed below the 200-day moving average. And this is the second close below the 200-day moving average since the start of the bull market. Did not see elevated volume here versus the prior day volume. So tech is definitely a lot weaker. QQEW, similar action, but it did reclaim the 200-day, however, on very low volume. Dow Jones, well above the 200-day, and even reclaimed the 150-day. So the more value, more dividend-related stocks are showing relative strength to other areas of the market, and yeah, elevated volume as well. So potential day one of attempted low. Mid caps and small caps, we will see fared out weaker than all other indexes this week, well below the 200-day moving average, below 3,000. So far, hammer candle right now, but that could easily falter as well. Russell 2000 small caps undercut, reclaim just this prior range of like 2050, but well below the 200-day moving average, which is actually sloping downward now and about 70% off highs too. VIX got a spike, but a reversal so far. Still remains elevated above 20, and it's definitely a cautionary sign for us. Dollar index continues to retreat and head lower. Tariffs are traditionally strong for the dollar, but there's concerns regarding our economy, uncertainty regarding tariff policy, and then just geopolitical uncertainty as well. Gold really building a nice pullback to the 21 EMA, reclaimed it, and building a nice little shelf here. Gold looks super strong. Gold miners building a cup with handle over 42.66. That triggers the buy. Bitcoin, really, I'll go to TradingView for this. Bitcoin. Yes, last night sold off on Trump announcing his executive order for the Bitcoin Strategic Reserve. We bounced, reclaimed the 90,000 level, but really just 20 minutes ago, Trump hosted the crypto White House summit with various crypto leaders. It only lasted like 10 minutes, and clearly the markets didn't like that. As you can see on the 5 minute chart, we sold lower after the meeting, rallied a bit, but still below or beneath this undercut reclaim level of about 89,000. Where is it? 89,028. So that's crypto. Finally, bonds rates rallied today a bit from the 1 year to 2 year, 10 year, and 30 year. Just a tiny bit, a few basis points. So not a whole lot of bond movement. So with that said, that wraps up the inter-asset correlation that we track every single day. And now I'll bring up the tail of the tape. Mild correction, still operating on the bear case, sustained break below and well below the 21 exponential moving average. News, we had the BLS jobs numbers today. Unemployment ticked up to 4.1% versus 4%. Non-farm payrolls came in a little bit weaker than expected, but we did have this upside reversal. I guess people were thinking the Doge cuts were going to impact the job numbers significantly more than expected, which is a good first start, potential day one low, like I talked about. Today's keys, we're watching the S&P versus the 150-day, which we closed beneath, and the 200-day, which we undercut and reclaimed. The Qs closed below the 150-day and the 200-day. Expectations are still negative. One other thing to note is that the S&P ATR is up to 1.25 and actually I think up to 1.3% earlier today. Some strong sectors, bond yields, utilities, energy, tech, oil and gas, and semis. But semis and tech are more dead cat bounces so far than really anything. Bond prices were down, dollar is down, financials, discretionary were down, Bitcoin and uranium were down. We did no trades today, 0.31 beta, 1.14% open heat. And bottom line is relief day as bears fail to push the markets lower. Monday's keys, still watching S&P versus the 150-day and 200-day moving averages, and the Qs versus the 150-day and 200-day moving averages as well. So to really wrap up this video, since our 21 over 21 is under construction, I want to go over the top 3 market cap companies first and then showcase some relative strength stocks. And we'll really just wrap it up for this week. If you guys are interested, we had a great podcast earlier today on just a lot of Don did a state of the market update, and Clara and I talked about some shorting and some short setups and some just characteristics of stocks popping and having rolled over so far. First one I want to talk about in terms of the charts of interest in NVIDIA. I went through in detail about NVIDIA and its topping look. Today we undercut reclaimed so far yesterday's lows, but we couldn't get back above 113.01. So the path of least resistance is definitely down right now. Apple is acting like a value stock, trading above all key moving averages. Really nice VCP look. It's not trading like a tech stock at all, really. But you're also not going to really see that much upside gains with earnings at 10% year over year and sales at 4%. It's really a loss growth stock. And it seems like it's going to be a stalwart for quite some time. Finally, Microsoft, really poor action in stage 4 like NVIDIA, well below all key moving averages. And when you have 2 of the 3 top 3 market cap companies in stage 4 declines, that is definitely not a good sign. Now on to relative strength names. First one, Lemonade, showing relative strength, undercut reclaim all the key moving averages on elevated volume as well. Baba, Chinese stock, just really nice high type flag starting to form here. WGS, capped up on really extraordinary earnings, 188% year over year growth, 67% sales, 69% gross margins, which has accelerated 3 quarters in a row. Same with earnings as well. It's putting in the sideways higher handle here. And over that looks really nice. China ETF is still something we're watching. Cup with handle, Maybe we back and fill a little bit, get that 21 EMA to catch up, and then we get going in Chinese stocks overall. Uber continues to build this handle-ish look on the right side of the space. Over this 77.65 area, it is potentially a starter, especially if the markets do decide to rally off the lows. These relative strength names are the ones you want to target. Another Chinese name, Chinese EV, continues to soar to new 52-week highs. Just extraordinary power. It's also a robotics company too, working on their humanoids and other robotic products. Earnings in 11 days. ASTS telecom company, super relative strength, filling this right side, really nice base. So that's another one we're stocking. RS line is making higher highs and higher lows, 99 relative strength. And finally, we'll go with VRT as the last relative strength name. This is still more of a stalwart company, very slow mover, but showing nice relative strength, filling this right side of the base. I don't really like gap down and this rally up, but still showing relative strength to the market. So we have it on watch here. With that being said, I'm going to wrap it up. So far, pretty much the conclusion is bears failed to push the markets lower. Bulls stepped up to the plate where they needed to. S&P still didn't close below the 200-day moving average, so avoided a weekly close below the 200-day moving average and 40-week as the first time in this entire move. So that's good to see. As you can see, elevated distribution volume. Who knows? We could see us close far below next week. However, the Q saw huge distribution and we did close below. So that is a huge warning sign. We're taking that change in character and taking it day by day and always managing risk first. And with that being said, I'm going to wrap up today's video. My email is ted at revereasset.com. You can also reach out to Don and Dan at revereasset.com. My Twitter or X is Ted H. Zhang. My phone is 855 Real Wealth. That is 855-732-5932. The website's revereasset.com. Our YouTube's Revere Asset. That being said, we would always welcome you to reach out to us if you have any questions or you want to become a client. And with that said, this is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening and have a great rest of your week. And have a great weekend, everyone.